So the fund in discussion is Quant Flexi Cap Fund. It has been in existence from 17th October 2008. So the fund manager is Sandeep Tandon. So if you look at the exit load, it's applicable only for the first 15 days, redemption first 15 days, and the applicable exit load would be 1%. So ideally, any equity investment, the minimum time horizon has to be 5 years. But this fund house has a different ideology altogether. If you look at the fund manager interviews as well, so he's pretty much, there is a lot of churn in the portfolio, and they have something called risk off and risk on. So let's see how the performance has been. The present AUM of this flexi cap fund is at 6,712 crores. So the direct expense ratio is at 0.62%, and the regular expense ratio is at 1.81%. So that means if approximately the distributor would be making slightly over 1%, provided there are no other expenses like marketing expenses and all that stuff which are being passed on to the customer. So if an advisor is recommending this or advising this fund, so that would be 1% plus GST, pretty much the same expense ratio what a distributor would be getting. But again, it makes sense to have an advisor or a distributor if they are helping you with the asset allocation, helping you with the financial planning or goals, and if they are giving you rationale why this fund is relevant to you. Definitely you should take help of such people. Otherwise, you have to do your own due diligence and see why this fund fits for you, both from the asset allocation perspective and the financial planning perspective. And then in such times you can probably go for the direct fund, right? Let's look at the analysis how this fund has done across the time horizons. Again, the relevant time horizons would be 5 to 10 years time, right? So on a 5 to 10 year basis, so both the direct and the regular funds have outperformed Sensex, Nifty 50, Nifty 100 and Nifty 500, right? And outperformance has been by a huge margin, both at the median level and at the minimum level. Because more than the max mean or the maximum return, it's always the median return and the minimum return matters most. Because 50% of the chances that you will end up between these two ranges, right? So if you look at the 10-year median return, it is around 21.97%, and the minimum return is at 17.79%, right? Approximately if you see the reduction, right, the 1 percentage point is something which would be going for the distributor here. So when compared with the indices, the outperformance has been around 5 to 6 percentage points. So on the Nifty 500 is the benchmark which they are following. So 13.85% is the median return on the 10-year horizon. Here the median return is at 21.97. So here it is at 20.98%. Approximately around 7% is the outperformance they have derived, right? So now let's look at the portfolio. See, the one reason why I have taken only few years is there is a huge amount of churn in this portfolio. Say, for example, whatever was there in the March, right? So March, they were having certain amount of funds in the cash, approximately around 11%. So 88% of it is invested. So if we look at the same stocks in the March of 2024, right? So whatever is 88% now, back then was 42%. And the same stocks, if you are looking in the month of March 23, it is at 28%. So in 2022, that is at 14%. That means there is a huge amount of churn. So not just here, even if you are looking in the other different time horizons as well, right? You will be able to see a huge amount of churn in this fund. So 1 second, let me just put the filters. Let's just see how it has happened here. So even here, if you are looking at it, Ruchi Soya is something which they are saying has the highest weightage. So everything put together. So at that point of time, they were fully invested. So this is 95.78%. And the number of stocks at that point of time were 34, right? So now if we look at this one, if you look at what stocks were retained from 2022, right? So here it is only 43%. Again, huge amount of churn, right? That is like 3.53% by March 24. So in a 1 years, in 2 years time, pretty much everything was changed, right? Probably they came back again to the similar stocks, that is like around 24-25%. So uh, of whatever was there on March 2022, right? So if you are somebody who are okay, if you are someone who is okay with a huge amount of churn, probably this may be the fund, right? But there is a huge, ideally the investing, you have to invest for the longer horizons, right? If it is being changed on a regular basis, again, this has worked for them. So, and the last 5 years have been extraordinary for almost pretty much everybody before this drawdown. So you have to be careful how this fund performs in the future, right? So let's look at the performance from 2014 onwards, 2014 to 2018. The fund has definitely outperformed the indices. If you look at it, the absolute return of Nifty 500 was around 86%. So the direct fund is at 148%, and the regular is at 141%, right? So, but that is from a point of 2014 to 2018. So let's look at brief periods in between. Say if somebody had entered at 2014 June, so 2016 September, the values are similar, right? Again, there has been a growth, huge amount of growth here. Again, 2017 April, so 2018 December, the NAVs are pretty much same, right? From 229 to 241. So if you are looking from 2019 to present, right? So from 2019 till 2020 November, so it has been, the performance has been something similar to the index. So the outperformance has been from 2020 November onwards to 2021 December, right? So you can see a huge gap. But again, from 2021, 2021, not December, August. So from 2021 August onwards to 2023 November, right? So the performance has not been much. If somebody has looked at the past performance, and if they have invested for the 2 years, the returns would have been around, on an absolute basis, this fund has delivered like 30% return, which was like 15%, which in line with what index has pretty much delivered. So 151 to, yeah, 191. So from here onwards, from 271 to 357. So again, here as well, the return has been around 30%, right? So, but this is in like 2 years. So what this fund has done is the returns have been coming in one particular period, and then it has been flattish, right? So again, it is something similar to what index has done. It has been flat when the index has been flat, but it has outperformed in certain periods. And at the same time, if you look at it, the drawdown has been a lot higher compared to the index. So let's look at the index. It has been from 264 to 231. That is approximately 12% of drawdown. So, but if you look here from 460 to 383, so that is close to 15%. Again, it's not huge. If you look at the lowest point as well, it's not huge. So, but there is a huge amount of drawdowns which have happened, right? In the late, and the entire chart, if you look at from 2014 to 2025, the performance has really come off after COVID. So they have done extremely well after COVID. Prior to COVID as well, they have done a decent job, but the gap has not been so high. Say, for example, at COVID, the index was at an absolute return of around 50%. So this is from 2014 in 6 years' time. So this has delivered around, so the absolute performance is there. So the absolute performance for Nifty, one second. Let's just look at this chart. You'll understand better. So at this point of time, you can see pretty much everything is coinciding from 2019 onwards, right? So whatever was there, the higher performance which was there during this period has helped them generate a slightly higher return here. So, but if somebody has joined exactly in 2019, so by 2020, the performance has been similar. So why an investor has to be careful is, like, if you look at the SEBI data, so most of the time, the investors who are investing in the active funds are leaving the funds within 2 years' time, right? So even though this fund is saying that the exit load doesn't apply after 15 days, if you are somebody with a lower time horizons, then this fund may not be for you, because over a longer durations, even on the 2 year horizon, if you look at the different from 2014 to 2016, right? It was pretty much flat, right? So what if you end up in this flat area? At that point of time, use investors usually lose faith and they move on to a different fund. So any fund, any equity investment, you have to invest for a longer time horizons only. So this video is for an educational purpose only. It is neither a recommendation to buy nor sell the asset class in discussion. So any equity investment, please look at your asset allocation and see that it is aligned with your goals or the financial plan. In case you are not somebody who is doing that, probably it will serve you better if you go to a financial advisor or a distributor. Thank you.